posted the slide presentation and the earnings release under the Investor tab on our website. Before I turn the call over to Ian, I'd like to remind you that some of our comments made today may contain forward-looking statements that are subject to the safe harbor language. Ian.
Thank you, Felix. Our consolidated first quarter financial results are provided in today's earnings release. In summary, we delivered strong financial results for the quarter with 9% year-over-year net sales growth, double-digit operating income improvement, gross margin expansion, a 170 basis point improvement in adjusted EBITDA margin, and new records in orders and backlog. Consolidated net sales for the quarter were $464 million, up $39 million or 9% compared to last year. Organic sales growth for the quarter was $28 million or 7%. Consolidated operating income for the quarter was $65.7 million, up $11.4 million or 21% compared to last year. Consolidated adjusted EBITDA for the quarter was $85.1 million, up $14.5 million or 21% compared to last year. That translates to a margin of 18.3% in Q1 this year, up from 16.6% last year. GAAP diluted EPS for the quarter was 75 cents per share, compared to 84 cents per share in Q1 last year. On an adjusted basis, EPS for the quarter was 76 cents per share, an increase of 12 cents per share, or 19% from last year. Order intake for the first quarter set a new company record, surpassing the previous high, which was set in Q1 last year. In total, orders in Q1 this year were $568 million, an increase of $65 million, or 13% compared to last year. Backlog at the end of the quarter was $1.1 billion, another all-time high for the company, and an increase of $3 million compared to Q1 last year. SSG's net sales for the quarter was $76 million this year, up $6 million or 8%. SSG's operating income for the quarter was $15.8 million, up $2 million or 14% compared to last year. SSG's adjusted EBITDA for the quarter was $16.8 million, up $2 million or 14%. That translates to an adjusted EBITDA margin for the quarter of 22%, up 110 basis points compared to last year. SSG's orders for the quarter were $88 million, up $13 million or 17% from last year.
Thank you, Ian. Our first quarter performance represents a strong start to 2025, inclusive of first quarter records across consolidated net sales, adjusted EPS, and adjusted EBITDA margin, thanks to the outstanding contributions from both of our groups. Within our Environmental Solutions Group, we delivered 9% year-over-year net sales growth and a 17% increase in adjusted EBITDA with higher production levels, growth in sales of our aftermarket offerings, proactive management of price-cost dynamics, and contributions from recent acquisitions representing meaningful year-over-year contributors. In what is typically a seasonally softer quarter, ESG's adjusted EBITDA margins expanded by 120 basis points year-over-year to approximately 20%, representing a new first quarter record and performance within the upper half of our current margin target range. On the back of our strong backlog and continued healthy order levels, our teams remain focused on building more trucks across our family of specialty vehicle businesses. Shifting to aftermarkets, demand for our aftermarket products and services remains high as revenues grew 11% year-over-year. Given strong rental utilization levels, our teams are diligently managing between ensuring sufficient rental equipment availability and used equipment sales to best serve our customers' needs. In the quarter, both rental revenue and used equipment sales grew double digits year-over-year. In the aggregate, aftermarket represented approximately 26% of ESG revenue in Q1 this year. I'm particularly encouraged by the progress we've made on our various strategic initiatives in the quarter aimed at expanding our market share. As a reminder, through cycles, we target annual double-digit top-line growth split roughly evenly between inorganic and organic growth. Execution on our strategic initiatives is an important component of that long-term growth algorithm as we look to drive organic growth in excess of end market growth rates. In the quarter, we reported double-digit organic growth in net sales of road marking equipment and dump bodies, driven by healthy end market demand, continued market share expansion efforts, and our reputation for high-quality products. In particular, our Ox Bodies business, with its primary manufacturing facility in Alabama, continues to expand its geographic reach into key southeastern markets such as Texas and Florida, enabling strong market share expansion runway in critical markets with additional opportunities available going forward. Further, our most recent acquisitions also contributed positively to top-line results, with Standard adding approximately $6 million of incremental net sales in the quarter, and Hog contributing around $5 million of net sales in a little over 6 weeks post-acquisition. On a full-year basis, we continue to expect that Hog will contribute net sales of between $50 million and $55 million in 2025. Shifting to our Safety and Security Systems Group, the team delivered another outstanding quarter with 8% top-line growth, a 14% increase in adjusted EBITDA, and a 110 basis point improvement in adjusted EBITDA margin. This improvement was primarily driven by a combination of volume increases and favorable sales mix. Within our SSG group, our public safety business led the charge in form of 13% revenue growth with strong margin expansion as the team continues to execute on an active pipeline of opportunities within police end markets. Lastly, we had another strong quarter of cash generation with $37 million of cash generated from operations, up 17% over the prior year. As a reminder, on a full-year basis, we target 100% cash conversion on a net income basis. Shifting now to current market conditions, demand for our products and aftermarket offerings remains strong, with our first quarter order intake of 560. This success has been a direct underpinning our future growth ambitions in Europe in this arena. An important strategic lever from a demand standpoint, creating one of the SSG Group launched. Despite current global macroeconomic uncertainty, our record backlog is the highest level in the company's history. Additionally, we are reaffirming our net sales outlook of between $2.02 billion and $2.1 billion. We are also reaffirming our expectations for double-digit improvement in pre-tax earnings and EBITDA margin performance in the upper half of our target range. This updated outlook assumes that the current trade agreements and recently announced tariff policies remain in place. Lastly, we are reaffirming our CapEx guidance of between $40 million and $50 million for the year.